Consumer staples, they're the products we buy no matter how the economy is doing. Think tobacco, food, paper products. But this group has not been performing particularly well in the stock market lately. Morgan Brennan explains why and looks for pockets of opportunity in the group.
Since the late August stock market correction, the consumer staples sector has underperformed the broader S&P 500 by half, the second worst performer behind utilities. Comprised of companies selling food, beverage, and household supplies, items consumers need regardless of the economy, consumer staples are considered a more defensive sector, one some investors are rotating out of in favor of more cyclical stocks poised to grow with the economy. Experts expect that to continue.
Consumer staples, because of its defensive nature, is going to suffer once rates start to rise and as economic growth starts to heat up. And the other factor with consumer staples is that it actually has the lowest earnings growth of any sector of the S&P, excluding materials and energy, which of course have gotten hit by the commodity downturn.
Since 1990, there have been 4 cycles of rate increases by the Fed. 1 month after the initial hike of each of those periods, consumer staples tumbled every time, losing an average of 1.5% according to data firm Kensho. Still, losses tended to be better than the broader S&P, which averaged a 2.5% decline. Names that have tended to fare better in a rising rate environment include Molson Coors Brewing Company and Costco, which each have in the past averaged gains. Names that have historically sold off include PepsiCo and Whole Foods. Still, amid all of the current market uncertainty, there may be some specific buying opportunities.
The silver lining of all this volatility, and this is true for many sectors in the S&P 500, is that consumer staples are actually very fairly valued at this point. So although I do favor cyclical sectors in the second half of the cycle, to the extent that you do need a little bit of safety or income or yield in your portfolio, I think this is a much better valuation basis to buy consumer staples than we've seen in over a year.
One place to look, companies poised to benefit from the holiday season. Names like beer and wine producer Constellation Brands, which has averaged a 17% gain in the final 3 months each of the past 5 years. That according to Kensho. Other stocks that tend to heat up with the holidays, Tyson Foods, McCormick & Company, Hormel Foods, and Costco, as consumers eat, drink, and, well, party more. For a Nightly Business Report, I'm Morgan Brennan.